Right, guys. um, Good afternoon. Welcome to Bavarius Capital's live room. Today is Friday the 13th. I know a lot of you guys might be a little bit superstitious. Some guys don't trade on Friday the 13th because they believe that maybe they could lose money. Myself, I think that's nonsense. I think I'm a better trader than the market. And sometimes I do bring my ego to the market. But I don't think that Friday the 13th is going to keep me out of the market, if that makes sense. To get the ball rolling anyway, just to go through the disclaimer, any advice or information given in the room is for education, is educational in the nature and general advice only, and does not take into account your personal financial circumstances. By viewing any material or using the information presented by Bavarius Capital, you agree that this general educational material, and you will not hold any personal entity responsible for losses or damages resulting from the content or general advice provided by Bavarius Capital Management, its employees, directors, or fellow members. Spot currency trading has large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest into the spot forex market. Don't trade with money you can't afford to lose, guys. The website is neither a solicitation nor an offer to buy or sell spot FX or other financial products. No representation is being made on any account or likely to achieve any profits or similar to discuss in any of these sessions. Past performance or any trading system or methodology is not an indication of future results. This information is for purely educational purposes. Right, guys, that's the disclaimer out of the way. I do apologize for the late start, but let's get the ball rolling. What I wanted to bring up today, okay, obviously we have, I know I was speaking to you guys last week about the non-farm payroll. Now, this is a crucial thing, what I was telling to guys about what was possible to happen. If you remember in the live room, on I think Monday or Wednesday, we were talking about the fact that non-farm payrolls had come out. You'd had a massive move up, and it just looked like the move was too strong. Now, if you remember, guys, I was saying that I would like to sell a little bit higher. It didn't properly get to the high levels, but you can see that the order flows come back. Now, this is an opportunity where it's giving you an opportunity to get in on the buy trend. Now, this is what you need to understand as a trader. I know I'm just skipping the news for a second. We will go back to it, but this is the type of stuff that I want you to see and understand as day traders, because it's just something that you need to be aware of, especially if you want to start to catch the longer term trends or the longer term moves. Yeah. Now, in regards to non-farm payrolls and that big move coming out, now you can see that there's clearly big purchasing power down here. Yeah. Now the market is going up. Now I haven't got a crystal ball. Yeah, but I'm confident that it's either going to be bouncing from this level or this level. If it comes down here, I don't know. It might invalidate it because obviously it could go through. Yeah, but I think long term the direction of the market is going up. Now, this market where it's trending like this, you need to be able to aware that this type of market condition is where, for example, hedging works better, for example, and strategies like mean reversion don't hold up. In these type of conditions, DC cross will get you in. Yeah, so it will allow you to get in and out of these type of moves, either or. Yeah. Now, this is what you guys need to be made aware of. One of the biggest things I find with all new students or people that are new to the market is the fact they don't take into account fundamentals or technicals to a high degree of certainty. Fundamentals move the markets generally, the sentiment. It's the way it moves over a few weeks and months. That's why now you can comfortably say that if this market continues to go up, it's indicating the fact that it's a weak dollar. Yeah? Guys, make sense? Now, looking at sterling, because sterling moves similar to euro dollar, there's one thing I want you guys to see, yeah, because this is textbook trading. This euro dollar move here, and it was worked a little bit better on cable. Yeah, I'll show you guys. It's textbook trading, guys. This stuff here, where if you look at it on a longer time frame, this stuff here is easy. Buy, sell low, sell high, buy. Now here, you got a choice. I think cable will come back down here to find orders before it continues to rally. Now, obviously, my view's a little bit biased, but I think personally that it shrugged off the whole Brexit facade, and I think that fundamentally sterling can't stay down there forever. It was a big news event, it pushed the price down, and it's clear that it's going to have to find some kind of mean. It's going to need some kind of news to take it like 150, 160, but I think it's comfortably heading its way back up to pre-Brexit levels, 144, 145. To go through the key level, it's going to need a bit of movement. Yeah. Now, it's just something to be made aware of. On euro, it's easier to trade it because it's a little bit more it's a little bit more textbook. Yeah, it can be a little bit manipulated. Now, what I mean by manipulation on euro, yeah, you guys have heard me talk about this time and time again. It's where it sometimes just breaches levels over a trading session, like where it breaches this level. This is the manipulation that I'm talking about, guys. Yeah. Now, the reason why I want to make you guys aware of it, some people get absolutely smashed on the euro because they don't understand the manipulation. So a lot of people get off put because it does false breakouts, it breaks out. Now, if you can catch entries in these guys, you can have good positions where the prices never come back. Now, if you trade something like euro dollar or you want to be confident, you should definitely trade euro dollar, because when you get the larger accounts, 100, 200, 300k accounts, it's easy to get in and out. There's no liquidity issues. If you try and execute a trade for like 500 lots or 1,000 lots on euro dollar, it'll get you straight out. If you try 1,000 lots on something like dollar NOK or dollar SEK, good luck. The fill's going to be somewhere else, if that makes sense. Now, let's get off to the usual start. I just wanted to touch base on that just initially, yeah? Let's get to the economical calendar, because this is what you guys should all be looking at initially when you turn on. Now, we've had a massive news week. This type of news week here doesn't happen every week, yeah? It happens maybe once every month, like a high impact news week. Now, that's why you've seen some of the bigger moves as well. We had non-farm payrolls, which as a figure was positive for the dollar. Yeah, I know it found orders when it came out, but it was actually a positive figure. ECB didn't really do anything. Those type of things this week didn't really move anything to the market. Yesterday, Carney spoke. Yeah, he may have given a bit more confidence to the pound, but it's at the moment that last bit of data that came out didn't really affect it. This is what we've got coming out later. We did have, it was CPI that came out for the euro, not the dollar. I do apologize. I'm speaking to some client earlier about that. Today we had that came in line. Looking at the chart on euro dollar, earlier, not really any move. If anything, I think that's it there, where it's just found some orders. Or this is the price action where it's probably just pushed itself up. Can you see, guys? News has come out, pushed itself up, found orders. That's the main thing I want all you guys to start learning, because guys are missing this and then they're understanding why they're losing, or the market's moving against them, or they don't understand where it's going. This is the crucial thing. I need you guys to start understanding where the orders are and where the market's getting pushed into. So let's get through the news anyway. Apart from that, today, there's not a lot out. It's probably going to be quite flat now, guys, to round up. Fridays, when you have the non-farm payrolls or any big decisions, you get big moves towards the end of the month. But this is mid-month. There's not really much going on. I think now the movement's going to be next week. Yeah, this is a good time now for you guys to be going through fundamentals, making sure yourself up to date. Now, looking at next week, because this is always good. A trader always foresees things. At the end of the day, information is key. Sometimes you might find some information which gives you an idea about where something's going. If it's directly affected to the currency markets, you could profit from it in a big way. Yeah. Now, looking at it next week, preparation Sunday. Monday, you've got a little bit coming out from the dollar. You've got a rate decision on Tuesday, or Fed meeting in Australia Bank. So basically next week is a big week for the overnight pairs. So if you're trading sessions like with the overnight Asian sessions, look, you've got Aussie dollar news, you've got some news there, you've got a little bit of sterling news as well, I can see. What else have you got? That's about it. So after Wednesday, hold on, we got next week's a big week for the pound. Yeah, okay. There's quite a lot of news coming out for the pound. Let's just finish off the calendar. You've got CPI for news. So there's still a little bit of news coming out that you guys need to be aware of. Yeah, if you ask me, I don't think you'll see as big moves off the news. You might see some pound movements off these events, but I think the rest of it is really self-explanatory. Unless you get a major figure come out completely obscured, you've seen this week, guys. Some of these speeches don't move the market as much. Before 2 or 3 years ago, when Draghi used to speak, the market used to move hell of a lot more than it does now. It's to do with the economical factors where the data now, because everything's doing so well, companies are doing so well, earnings are good, projections are good. What happens is sometimes it's less effective to when things are speaking because the figures are so good, so people are so they don't take aware of it. When you're going through a crisis and you're getting good figures or bad figures, it has a better effect. You get more movement generally after like a crash or a correction. So at the moment the news is not as effective as it could be. You probably, I know we prey on it, we drone on it, especially in the live rooms. We spend a lot of time going through it because it's so important. Helps you identify whether the market's trending or range bound. Helps you identify whether to go out in shorts or whether to go out wrapped up, whether you're going out in the summer or the winter. That's the best type of analysis or comparison that I can give. Yeah. Now, apart from that, I don't think there's much going on. Today is going to be quite quiet, guys. You're probably not going to see much big moves. You might get a little bit of a move off the US session. UK close 4:30. You might get a little bit of reversal. The market's generally quite flat. If you guys are holding positions overnight, yeah, you know the rule, the third rule, yeah. Somebody sent me a P&L last week. They were holding positions for 6 days offside, no stop loss. If I see that, that's no. What you're doing there is you're bringing your ego to the table, yeah. Now let's get to the charts because that's what everybody wants to see. Now, things I'm looking at, yeah, because obviously that's all I can do. I can give you an idea about what I'm looking at, yeah. Now this level here, I like it. It's second touch. Yeah, so that's the first touch. This is the second touch. Just to touch on first touch and second touch. You know, you guys, when you see the market running away and you guys think, oh, I want to get in, I want to get in, I want to get in, I'm missing out. Do understand, yeah? If you don't get a reversal from that level or this level on the first touch because it finds orders, the market will always come back to retrace to find orders and go back. Like what I was telling you when the price was up here, guys. Yeah? Now, that's crucial. So when you could expect a second touch up here, it could invalidate it. Who knows? You can't have a crystal ball like that. The thing I think I'm finding, especially when speaking to guys and seeing some of the messages in the group and some of the messages that I'm getting myself is, you guys need to fall in love with the process. You need to fall in love with placing the trades, not the results. Some guys take a result and they fall in love with it, whether it be a loss or a win. Yeah, I just want to show you something, guys. Yeah, because obviously some people think that it can't be done. Yeah, if you look at this trading history from when it started, yeah, I'm showing you. I've just been placing trades on this account for about 20 days. Yeah, if you have a look at the trade sizes, I know it's not on a live account because we can't trade or we can't show you any information in the live room on a live account because it doesn't adhere with regulation. But it just gives you an example of exactly what is possible, what is available in the market. You can have a look. If you scroll down and have a look, I'll send this to anyone just so you can see. Yeah, the account's nearly doubled in 16 days. There's no losing trade. There's one big losing trade of 1,500 there. Yeah, I think that was a double up on one of the positions. Yeah, apart from that, you can see there's no massive losing trades. There's quite a lot of, only as the account started to grow up, but you can see how much volume I've done. Yeah, this is not necessarily for the guys that can turn the volume. This is for the newbies, just to show you that it can be done in regards to position sizing and turning the volume. If you have a look and add this up totally, I think I've done a total of 200 or 320 lots on this size account. You can see it started there. I'll send it to anybody just to show you an execution. If you review this P&L, guys, it's purely done off supply and demand. Yeah, I've purely created this P&L for guys just to show you guys that supply and demand works. Yeah, that's what I believe anyway. Yeah, obviously people ask time and time again, how do you do it? How do you do this? How do you do that? Kennedy, yes, we will look at thing. Let me just show you this and we'll talk. So this is just an example that you guys can grow accounts and you can do it on a 30-day basis. As a day trader, if you want to make money, you need to make money in a 30-day period because you need to pay your bills at the end of the 30 days. And this is living proof that if this is just me trading one strategy and just doing it, just to show you guys how it works. I'm not not trading any cross pairs. I'm sticking to the rules. I'm just trading the 4 majors, 5 majors, and I'm trading the rules. I might have other things on the chart, but this is discipline. This is what I need to start seeing from you guys. If I can't see this discipline or this understanding, yeah, you're never going to get investor funds. You're never going to get million. I'll tell you guys the honest truth. You see, when I trade anything 10, 20k, 50k, it's like a second nature for me. It's when I scale up to 500,000 or 1 million when the emotion kicks in, where sometimes you make crazy decisions on small amounts because the money doesn't mean anything. My P&L is basically emotionless, so I make the decisions without any regret or anything. Now, that's enough of that for now. That's any of you guys want to see that, call me up. I'll send it across just to show you guys. Obviously, I can show you live trading accounts as well, because I know some people have asked that. If you send proof of funds, I'm more than happy to sit down with you guys and show you live trading accounts. But obviously, this is for educational purposes, so we can't show you the live accounts because it will be like in hedging you or basically a conflict of interest, if that makes sense. But looking at it, coming back, Kennedy, you wanted to look at Aussie dollar. What did you want to look at on Aussie dollar? Because let's go through it. If I find anything invalidating the rules where we're doing it in a group, I'm not going to be happy. But go on, tell me, yes, and that's it. What are you doing with Aussie dollar? What do you want? So don't forget, Aussie dollar is going to follow euro dollar a little bit. Yeah. Can you hear me? What would you like to know about Aussie dollar? Would you entries? What I think of it? What's your point? Hello, Kennedy. I'm not too sure what he wants to know about it, but Aussie dollar, just to give you guys a little bit of a rundown, clients do ask this. This is clearly moving similarly to the dollar, where instance how the euro, how pound is moving. Yeah. Now, Aussie dollar has a high correlation to the euro and pound, but obviously, as you can see, the Aussie dollar hasn't let up yet because it couples off the back of Aussie dollar, New Zealand dollar, and Canadian dollar. They're seen as 3 pairs. Now, sometimes the correlation is not as clear on something as Aussie dollar levels. Perfect. Okay, that's not a problem. Coming in now, if I'm looking at it. Now, this is good learning, okay? Because obviously this is a clean chart, yeah? So some guys ask how I put the roadmap, yeah? Let me put my levels in for you guys now. Now, this is support and resistance. Support and resistance is just anywhere where the price could be reactive to. You guys might just say, oh, this guy's just drawing lines all over the chart. But don't forget how I use them. I use them as a roadmap. They're used as an instance where it gives me an idea in regards to trade management, yeah? Now, 5-day range. Oh, sorry, guys, I made a mistake there. 5-day range, yeah? 1, 2, 3, 4, 5. That was too many lines below, yeah? The reason why you do it on a 5-day range, guys, is because it gives you an indication if the price goes out of the 5-day support and resistance, that it's more likely to be trending than ranging. So if you have a look at it, you can see this price is continuously moving out of the red zones. Can you see that? I'm confident that this market's trending. It's moving off the back of fundamentals. Who is that? Don't worry, we'll talk about that again in a minute, whoever that question is. Let me just finish this off. The small losses are simple. You can't have a risk. You need to add a stop loss and put a trailing stop in it. And as soon as you see the trailing stop come to break even, you cancel it. That's it. But anyway, let me just finish Aussie dollar. So as the price is moving up, guys, yeah, you can see the price just moving up, yeah. Now what I'm looking for here is levels. Now when you mean levels, yeah, I'll be honest with you, Kennedy, I wouldn't want to be selling this yet. I'd want to be buying it, yeah. Now if you're looking at it on a 5-day 15-minute, you're trying to catch the intraday trend. Yeah, so because the market's moving fundamentally at the moment, I'll be wary about selling it, but do expect a pullback because the market needs to find orders. It can't just continuously move up. But if you have a look at it, I wouldn't fall in love with these levels here. I think they're too high. I'd fall in love with these levels here. But it's obviously data dependent, news dependent. Now, if you're looking at it, this level here looks quite good. Yeah. Any of these levels where the support and resistance line up together, I'm confident where you can take them. Yeah, so these levels up here, don't forget, with the supply and demand indicator, we help you. The reason why you're not seeing buy zones up here is right at the high. Even these zones, it's just on a daily frame where you would buy them. Now, zooming in, because this is crucial how you're getting entry. This is where, if you ask me, I want to be buying. Yeah. Now, looking at it, second touch. Remember, I was telling you guys, never take the first touch, because when it runs away, it will generally come back to confirm orders. If it tanks from here on the first touch, you know there's institutional power. It's something to do with the timing and the trade management. Yeah. Let me just go through this, because this is crucial. Now, there's a lot of guys in the room as well. I just want to just touch on this very crucially. Yeah. When the market runs, it finds orders and comes back. It's a tug of war between buyers and sellers. Prime example here. Yeah, markets run away. When it's run away, it's come back to find orders down here, but it gives you something what I call a second touch. These second touches are the ones which give you the better entries for supply and demand. This is breaking it down, going further into the entry side of it. Yeah. Now, when these support and resist, these second touches match up with support and resistance, for example's sake, it's not really clear here, but say for example, if this comes up to here and it matches with the supply zone, the support and resistance zone, those are the ones with the more entries. It's more likely for banks to be placing orders there because there's more variance, for more reasons for them to do so, especially when they're building positions. Now, the second touches are where the market picks up more orders. So what happens is 1 million, 2 million. Now, that when it gets enough more orders, you get more of an imbalance. That's why the market comes down more violently. Yeah, so that's where, don't feel fearful if you feel the market running away. It will always generally give you a second thing. I know you guys are a bit quiet. I'm not too sure who's that was. Josh. We'll speak about Josh. I'll give you a call myself personally later, and we'll go through it. Have any of you guys? You got any questions? Can I get a bit of feedback? Can you guys hear me okay and stuff? Yeah. Yes. No. Maybe.
Yes, mate, no problem.
Fantastic. So what I'm looking for here, yeah, is a second touch here. Now, this second touch is crucial. It's what you're waiting for. Now, as a retailer, sometimes what happens is you feel a little bit on edge. You feel a little bit like, oh, I don't know what to do. It's run away. I'm missing out. What you understand is this second touch here gives you a good entry as well. Now, looking at this, I'll be looking to buy here. I'm not going to fall in love with any of these levels here, Gennady. It's no good to me because it's middle of the range. It's invalidated. And don't forget, that's on a shorter time frame. That's over a 3-day range. I'm not going to fall in love. If anything, I'm looking to buy here or buy here. It might not give me those entries, but if it does, my orders will be there. In fact, I don't really trade Aussie dollar because I've done this for P&L, but just for the sake of it, I like these levels down here. It's going with the trend, market's moving fundamentally, but when I leave the office later, I will cancel them if it doesn't get there because I'm not going to leave it overnight, over a weekend where some of the orders are in there. Do try and manage your orders a little bit aggressively as well. If there's a lot of orders there, do try and manage them. Don't keep so many orders there because what happens is you could get triggered in them all and then unless you've got a big account to load up the margin, you want to be a little bit selectful of it as well. Yeah, Gennady, is that good? Yeah, is that giving you a little bit more about ideas? I'd definitely say there's a sell limit order up here though for a second touch as well. Yeah, I wouldn't fall in love with it. Probably not at 10 lots, but 5 lots or 2.5 lots, comfortable. Now, that thing I've just mentioned to you there, trade selection or trade management. A lot of guys, especially people that trade in the markets for a long time, they use a probability factor where they use a certain amount of rules. Now, I know I've been going through the rules with you guys again and again. If your rules line up again and again, I'd use a bigger trade size. If it's invalidated because some things where you're not falling in love with it, then reduce the volume. There's no harm in reducing the volume. It's better to take a small loss learning than take a massive loss and be unlucky, or a big win and be unlucky and give you a full sense of security. Yeah. Now, this is what you can say. I wouldn't be buying here, even though the zone's just turned up. I wouldn't do it. It's near the high. I just don't do that. Institutions don't do that. The risk rewards out. Myself, if you're getting in here, what you're doing is you're the retail money. You're just helping get them out of their position, whatever level they're going to think. This happened on euro dollar. If you guys remember live in real time, the price was up here and I was like, I don't think it's going to go through. Now, that's a similar sort of thing. Sometimes what you'll find is with Aussie dollar, Euro dollar, cable, New Zealand dollar, sometimes they move a little bit out. It's the reason why Euro dollar and cable are moving such right is last week was a massive news week. You had ECB, FOMC, sterling. I think this week when you've got rate decisions and stuff like that coming out with Australian dollar next week, remember we looked at that, guys? Yeah, be a little bit wary. You don't know what's going to be happening. There could be big moves overnight on things. One thing I say, you know, things like Aussie dollar, dollar yen, pound yen, euro yen, these pairs, yeah, they move in the night when you sleep, when we sleep. As we trade in European hours, we trade basically London Open towards the back end of the US session. We generally sleep between 10 and 6. Now, when we're sleeping in those times, you get all the moves in Asia. Yeah. Now, this week, next week, for example, you probably will see a bit bigger movement in the breakouts in the Tokyo session because of the news. Now, that is something that you guys need to be aware of. Like last week, I know Tokyo wasn't working as well. Yeah, so be aware of that, guys. Next week, Tokyo will work a little bit better. And also, in regards to that, if there's big movements in the overnight sessions, you know that the London Open ranges could be a little bit wide, but it will make the US ranges a lot better. If London Open is wide, if you get good breakouts from London Open, it invalidates US Open. Yeah, but it will probably be liable for Tokyo to be better. Make sense? So don't forget, there is 3 opens that you can trade from. The only thing I'd say about Tokyo, yeah, is be aware of the wide spread. If you see the spread too wide because there's some news, the only time the broker widens the spread that much is when there's no liquidity. There's no orders, the spread is wide. It discourages you to trade. Generally happens after hours. If any of you guys have been trading for a while, you'll know in Brexit, yeah, I don't know if you guys were trading through Brexit and stuff like that, they've reduced the margin requirements for sterling. So you needed you needed on 400 to 1 or 200 to 100 to 1 leverage, you needed £1,000 to open one lot. Through Brexit, you needed about 9k on an ECM broker to open. So that means what I mean by that is like straight through processing. To open a one lot position, you needed 9k on Brexit. With a spread betting broker, it might have been a bit less, 3 or 4k. But typically, when there's big volatility, the brokers do widen the spread. It's not foul play. It's just that it's the way the market works. They don't widen the spread to discourage you and increase the leverage. If the markets move against them, they can't pay you out. That's why they do it. Does that make sense? Where we're trading here, our profits come from somebody else in the market, not from a company. That's why we use ECM brokers, or because when your account gets bigger, there's no stipulation. Some guys ask that question. That's why I'm just covering that point there now. Yeah, so I wouldn't fall in love. Now, coming back to euro dollar, I think this is going to be quite range bound for the rest of the play. I'll just be looking at some levels to buy and sell here. You're getting, look, this is that second touch I was talking about. The rundown, come down, it's confirming orders. 5 million units, 10 million units, builds positions. This is how institutions work. This is what you guys need to start understanding. The reason why I didn't trade no London Open on that, guys, was just to prove to you guys that supply and demand work. Some people were thinking that the levels were getting invalidated. Coming back to that as well, because somebody just asked about the P&L. I wasn't taking any entries in the middle of the ranges, guys. Yeah, I was mainly taking the best ones at the high and low. Now, on that, I'd take a reasonable range. Yeah, a lot of the times those orders won't get filled. But when they do, you get fantastic entries, if that makes sense. Yeah, it's got high probability. Yeah. Now that's the thing that you guys need to be looking at. Obviously, you guys can adapt it. One, I know we were looking at something at the moment where we're looking to couple some things together, can have a high probability for newbies where they can just pick it up and just put it on the system and run with it. Yeah. But the market does anything that you're going to make big money out of has some kind of difficulty behind it. If it was easy, everybody would be doing it. And that's this type of stuff now that psychology-wise we need to play with you guys, because even when I was in the prop houses and when I was being brought through the trade, my trading career, I was always had guys working on my psychology. I had traders around me. I had people around me that won. A lot of the people, the differences that I see from people that trade in the markets long term to people that, there's a famous saying, yeah, and going back a little bit off topic, I know, but a professional trader doesn't stop trading when he loses. Yeah, only an amateur does that. An amateur only goes, how should I say? He only stops when he goes broke. If you keep going through it and you're confident enough, you'll come through losses. That's the thing about trading. You need to start to enjoy the losses as well as the wins, and you understand it's about the process, because that's how you're going to get to to the end goal. You're not going to get to the end goal if you fall in love with a loss or a win. Yeah. Now coming back, let's just go through a few things. Yeah. So euro dollar is probably going to be a little bit flat. Looking at it, dollar Swiss. Don't forget this moves invertly to euro dollar. Yeah. So if euro dollar is generally going up, yeah, or down, this is generally doing the other thing. Now at the moment, if you look at dollar Swiss, yeah, it's a little bit out. It's like it's trying to choose a direction. If you ask me personally, where the price is here, you can't say whether it's going to 100% go to here or 100% go down to here. It could go either way. This is my point. This is in the middle of the range. It's a tug of war between orders. You guys don't get yourself caught up like retailers and say, I want it to go up, I want it to go down. You need to fall in love with the levels and protecting the account. The market will move in your favor if your entry is good enough. And that's what I wanted to breathe upon today. I know we've got off topic. I know I'm a little bit passionate. I know I speak a little bit fast, but this stuff is crucial. Guys that have been trading for a few weeks and months now will understand what I'm talking about. It's like, oh, it makes sense. Don't fall in love with whether it's going to go up or down. Who cares? All I care about is I'm taking the order, moving my stop to break even. If the market moves in my favor, it will grow. If I repeat the process mathematically, 22% of those trades will run in my favor. If you have a look at it, I've only got a few big winners. Yeah, and that's because it only takes 1 or 2 trades. If you do mathematically 200 to 300 trades a month, even if it's like half a lot, 1 lot, 10 lots, 20 lots, 100 lots, you will see that they will move in your favor. The only thing is when you do it on a small account, it doesn't mean anything, because when you win 50 pips at £1 a point and you win 50 quid, what's that? It's nothing. You're not going to be able to cash in on the high or the low. There's a saying, especially when I was trading, that one guy that influenced me in my trading career quite a lot. As a junior, I met quite an old boy, but he was phenomenal in his understanding about the market. And the one thing that he taught me, and I'll never forget, he said this. He said, Neil, you have to allow the market to breathe. The market doesn't move in your favor in a day or in 2 days. It moves over a period of time. And that saying or that thing stuck with me since for about 8 or 9 years now. You have to allow the market to breathe. Yeah, that's a crucial thing I want to get across to you guys. The market will never just put your order in and you get filled and it just turns. Look how many candles it takes to turn on a 15-minute. This is the type of thing. If you look at it here, yeah, so 1, 2, 3, 4, 5, 6. Let's just say it's taken about an hour and a half for it to turn. That's the biggest thing I find with you guys that are a bit impatient. Yeah, you get in, you take the order, stop to break even, stopped out or not stopped out, or you taken a premature entry, or you missed this because it didn't come into the box. And you're like, oh, you're chasing trade. Why do you let that stuff affect you mentally or physically or emotionally? Who cares? I'll find another trade. They're like buses or like girls. There's more coming along the way, guys. Yeah, that's how you guys need to look at it. That's how you guys need to interpret it. Yeah. Now let's just flick through a few pairs. Now this is the other thing I want to talk about today. Dollar yen. Yeah. Now this is strong from dollar yen. Yeah. Now some guys are talking about the correlation being out on pound yen and pound dollar and euro yen and euro dollar. It's because of this move on dollar yen. Fundamentally, for dollar yen to move like this, it's going to have some kind of awkward effect. Can you see that? Whereas if you look at pound, yeah, it's not as clean cut. The move's not as aggressive as that. It's come back down a little bit. That's the yen that's holding it up, or weak yen that's not allowing it to come down, if that makes sense, guys. Yeah, be aware of that. Yeah. Another thing I would say, you know, when you're looking at things like Aussie dollar and stuff like that, yeah, these pairs move more than euro dollar, cable, dollar yen, euro pound. You need more margin and you need bigger accounts to trade it. The reason why I stick with these 4 pairs here, do you know why? Euro dollar, cable, dollar yen, euro pound. Yeah, that's what I'm focused on. Yeah, so that one should be cable. Yeah, the reason why, guys. Yeah, let me just sum this down. The spread's the tightest on these and across any platform. If I'm trading pound CAD and paying 8 pips or 4 pips to get in, why am I trading that? At the end of the day, it's about cost. You've got to pay close attention to detail. These ones have the tightest spreads. If you've got 10, 20k in account, I'm happy for you to trade things like Aussie dollar, pound yen, euro yen, because they're quite wide. They do move. Things like pound yen can be very unforgiving, guys. I lost Pound yen is the reason why I've lost about 30 or 40% of my money to the market. I've lost a hell of a lot of money on pound yen. This thing just moves. If you don't understand it or understand how it's moving, it can be very unforgiving. Yeah? Now, That's one thing I wanted to show you guys. What I was showing Gennady as well on the 15-minute, how to support and resistance on the 5-day time frame. Now yeah, if this price starts to move out over here, it's more likely to be trending. I expect it to be coming into these levels though. Yeah. Now euro pound is something else that I want to be looking at you guys with as well. This thing has been falling dramatically out of the sky. You can see. Even if I had the levels here, you can see this is where you know it's moving fundamentally. Euro pound has a very tight range, guys. Yeah, you guys, a lot of the new students, you lot are missing very good tricks on euro pound. Yeah, I know it's choppy sometimes and it bangs you out the other way by taking a false entry, but the ranges, look at the risk reward on this. 4 pips, like. Come on, guys. Like, it's moving now. Now, this has been moving quite aggressively for euro pound. I'm telling you, euro pound does not move like this. I've watched euro pound for 10 years. It doesn't move as aggressively as it's moved in like the last 2 or 3 weeks. I've done extremely well off the back of euro pound. I like to go bigger volume on it because it just moves so well. Yeah, but you can see that there's big moves. But I think it's going to be coming up into these levels to find orders. These levels are in the middle. You could try and buy it counter trend, but it's like the move on the back of this. It's directly affected on the back of that big move from the euro, why it's come down. Yeah. Now, the only thing that you need to be wary of is stuff comes out with sterling. It's going to invalidate this, and that's why it's being so choppy. That's why it's being so well at the moment, where you've got movements from the euro and the dollar, and also sterling's been in the light a lot as well. Yeah. Now, also, some stuff I just want to touch upon, and this is going a little bit off topic, but I know I'm going to be running out of time, yeah? But looking at it, have you guys been looking at the news, yeah? And looking at what's going on with Trump and, for example, what he's saying and what's going on with Russia and stuff like that? Have you guys been looking at that or not? Yeah? Yes? No? Maybe? Not only do you want to be playing on economical data, guys, you want to be looking at things like BBC, CNBC, Bloomberg. What happens is on these type of meat feeds, things come up, yeah. Like you can see it. I was reading about it yesterday, yeah, just to give you guys an understanding. What is this? Putin has some anti-missile things or guns to shoot down planes that are basically protecting Syria. Trump saying, listen, I'm basically going to start a world war. Who knows what's going to happen? But I read something really interesting, and me and Paul were speaking about this. Putin saying that he'll go for the energy cables that line between that line up between Europe and things. So, like, do we really want to be getting into a world war crisis? Yeah. Now, the thing that you guys need to be aware of is if something happens where we go into war, uncertainty, yeah, currencies are going to be vibrant, markets are going to be down. It's going to be risk off. Yeah. Now, the major thing, guys, that you guys are waiting for, and what I'm looking at myself as well, just going through a few things. This is stuff you guys need to be aware of it. When you start to see it coming up on every news feed, so on all Bloomberg, CNBC, Reuters, whatever you guys are looking at, you need to be looking at this stuff. It's good just to keep yourself up to date with the general fundamental understanding of what's going on. It gives you an understanding of what's going on in oil, gold, whatever it could be. Now, this type of stuff in the news about economic uncertainty, at the moment, it's not having a major effect. But if we have, for example's sake, a correction in the market or Trump coming out of power, this stuff could be the catalyst to creating a crash or economical crash. Now, that's what, if you look at the markets and stuff at the moment, yeah, just bringing up slightly off topic, but I know some of you guys might be holding stock as well. Look at what happened, yeah, after Trump. This is Trump, basically. This is the whole thing. What's happened after. For example, hold on 1 minute, it's a little bit further than that. This is Trump here, guys. Yeah, this is what happened the night he came into power. Now look at what he's done to the market. Look at that bull run. Anybody holding equities is winning at the moment. Yeah. Now this type of movement, 25% up from 16,000. Yeah, is a hell of a lot of movement. It needs to come down somewhere. The volatility in a falling market is twice as much in a rising market. It falls. If you have a look at the way a market falls, it falls instantly and it rises slowly. In a falling market, the volatility in the FX market is phenomenal, guys. Anybody can score. You could be a Sunday league player and be on the Premiership at the top league, and you can make money if the market crashes. And this is something that you guys need to be made aware of, because it's more of a thing where if we call the markets in real time, it will help build credibility on our side. The last time this happened was 2008, Lehman Brothers crash, when the markets bottomed out off the back of the subprime mortgage lending crisis. Now, we don't know what the catalyst was going to be. 2-3 years ago, they thought the euro was going to pop. It changes. You can't hold an opinion. Now, this is the point I'm coming back to in the live room, yeah? Never fall in love with a trade, never fall in love with the direction of the market, and never fall in love with an opinion. Now, a smart guy will do one of two things. He will either fall in love with an opinion and change his mind, but what happens with a lot of retail mentality, guys, is they fall in love with the position and they hold it, and then when they lose, they get upset, they get emotional, they start thinking, why didn't the market go in my favor? Why didn't this happen? Why didn't that happen? Do you know what? The market doesn't care who you are. It's not subjective to whether you went to a red brick university, whether you went to a normal school, wherever you went. It doesn't really care. Yeah, that's the type of thing I want you guys to start to get in love with. Fall in love with placing the orders and holding the positions. Never fall in love with the price. Have no emotion in which way the market's going to go. The market's going to move regardless of what you do. If you start to be emotional and say, I want it to go up, I want it to go down, what you're doing then is you're gambling. And eventually you're going to run out of luck. When you sit in the market for 1,000 days, 2,000 days, you can't be lucky. You need to be skillful. And that's just the short and gist of it, guys. Yeah. Now, looking at it, there's not really much I can see, like even looking through just now to see if I could take a little entry. There's not really much there. I don't know if you guys remember that dollar yen entry gave me a big move from that move on this account as well. This is the type of things I want you guys to start falling in love with placing the positions rather than falling in love with the result. Now, looking at euro pound, because I just want to look at this as well, guys. Yeah, euro pound is probably going to now be range bound within this bottom section. Yeah, what you guys are looking for, whether it's going to hold up or not, or whether it's going to just continue to come down. Now, next week, if I look at the ranges on this, 5 pips, 4 pips, the movements are on the table. No one's trading euro pound. A lot of people, because what happens with euro pound, why a lot of people get put off, it gives you a little false entry sometimes, but because it gives you a few losses, don't stop trading it. Go through it for 90 days. Send me a P&L of London Open for 180 days, 6 months, and show me that the P&L is not up or down, and you've made all the decisions and not pick and chosen the days when you're going to trade, but you've traded every day consistently, put the hard work in. One thing about trading, guys, is it's about the work ethic. Work ethic is crucial. People that do big figures in trading, they've got work ethic. They rinse, repeat, they follow the process. Yeah. So now, have you guys? I know that you want to. Josh will go through that later on, but I hope I'm getting down to the real fundamental understanding about how the market moves. And also, I want you guys to couple these things. Now, one thing that I think is getting missed out a lot, and I'm going to go through it again. Yeah, support and resistance is not what this is. This is I'm just putting them in. Yeah, what I want you guys to know. What's the first rule, guys? Sell high, buy low. Yeah, still seeing guys not selling high and buying low. Yeah, the second rule, you have to put a stop loss in for 10 or 20 pips, depending. 10 or 20 pips on the London Open, 10 to 12 pips, no more in supply and demand. That's it. I'm not asking for 100 pip risk, 200 pip risk. I'm a day trader. I'm using that to my advantage. I'm using the fact that I'm nimble. I can get in and out to my advantage. People think day trading is gambling and it's risky and stuff like that. It's not. If you understand and follow these rules, this is going to be a cash cow for you. At one point, this thing here will turn from a burden into a cash cow generator. Now, it's if you follow the rules I keep trying to imprint in the back of your heads. Yeah. Now, looking at it, the third rule, and I've heard loads of people say this, if I had held the position for 3 days more and not cut it, I would be profitable. Yeah, that means your price was wrong. That means your entry was in the wrong place, and the institutions would have pushed it about to catch your stop loss anyway, guys. Yeah, the reason why I'm showing you guys this, I'm just showing you guys how I develop it, how I put it on there. Yeah, now that's different. Support and resistance, I never use that for entry. I only use it for trade management. If I take a buy there and I see the price coming up to these levels, I'll probably take the profit. Why am I going to try and be a big move? The big move in trading, yeah, where you catch a 2,000 to a million, guys, sorry to break it to you, doesn't exist. I do apologize if you think that I'm killing the Father Christmas or something like that, but it's the fact. Money makes money. And growing up as a kid, even though my mum said that money didn't mean everything, if you've got money, it does help because that's how the big money is made. You guys need to be realistic in regards to expectation. But obviously, if you can do the skill, you can get the money from anywhere. That's the biggest thing that you guys need to understand. Can you turn the volume? Can you do the process? Because you can get money from anywhere if you're in complete control of it, right or wrong. Now, that's what I need you guys to start to inbred it and start to understand. This is like a sport. You're going to get knocked down. You're going to take a punch or two to the face, but you need to come through it. You need to come through the process. Trading is probably one of the hardest things to do psychologically or emotionally. That's what it is. It's a battle between your emotions, fear, greed, what's going on. What did I miss out on if I'd left my stop here? You need to start to remove that and trade it as a thing where you're trading for positions. You're building up buy and sells in the right places, in the highs and the lows, stops at break, and you're allowing the market to tell which way you're going to go. Now, if you start to understand the mechanics of what I'm teaching you, you should start to apply this and turn this into a cash generator rather than a burden. If you guys hold positions overnight with no stop loss, what you're doing is you're allowing the market to eat into your working capital, and when you should be cutting it because you know that you're wrong. If you're wrong in life, some of the smartest people are wrong. It's not about understanding that you were wrong or you were right. It's about accepting it, moving on, and fixing it. That's the thing I want to come back to opinion. If you think the market's going to go up and you were wrong, don't fall in love with it. Fall in love with the process. If you fall in love with the fact that you think it's going to go up and it doesn't, you might fall out of love with it. And that's the point that you need to start to understand, guys. It needs to be emotionless. It's not that you want to win. It's that you placed the orders and gave yourself the opportunity to win. Now, as soon as you move your mindset into that type of frame, some of you guys will instantly turn hell of a lot profitable overnight. Yeah, it's like a thing. A lot of people, there's a story, 3 foot from gold, where they were digging all the way down to get gold. They were 3 foot away, but they missed it and they went all the way back up. And that's what happens to a lot of traders. They ply away at it. They look at theories. They look at stuff online. The stuff I'm giving you here is worth a hell of a lot of money. Trust me, because it's in the right hands with the right person. Some people pick it up and make a hell of a lot of money out of it. It's not for everybody. I'm not going to sit here and say it is, because some people, the emotion's too much, it becomes too difficult. But anyway, just to wrap it up, have you guys got any more questions? I know that the recordings are going to be placed up. We are going to be placing a few more other live rooms around people's convenience as well. Maybe some in the afternoon, some in the evening. So we are going to be switching it up as well, because we want some other of our clients to be coming in. Guys, can I get a bit of feedback? Is that good for now? Is that happy trading? Yeah?
Thanks, mate. Thanks very much.
Fantastic. I'll wrap it up anyway. The recording will be there. Any questions, any queries? Josh, don't worry. I'll be in touch with Paul as well. We're going to go through some stuff. Anybody that wants to see that thing, give us a call. We'll see you next week. Market's going to be a little bit flat. Monday, happy trading, and we'll get the ball rolling again, guys. Thanks.